45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Tonight's video, we've got to address what is going on in the world. We're seeing all types of industrial boom starting to happen, and this is what Trump told us was going to happen. So let's dig into tonight and see exactly what I'm seeing. Well, welcome everyone. It is Thursday, so this will be the final broadcast for the week. Really interesting times we're living in. We finally saw the crypto breakout that's been kind of building, and we'll go through detail on that tonight since that's probably the market that's moving the most right now. It's interesting. We're still seeing the markets grind, but the more I look at things, I've been telling you for maybe 6 months or more that the third and fourth quarters of this year, we're looking like we're going to see some softness. And I've also always have told you and adhered to these practices that my database is the driving factor in a lot of what I'm looking at. And what we are seeing, if we go back to the first quarter of this year, we're seeing a lot of weakness. Market was after the big announcement on the tariffs, we saw, we declined down 21%. Of course, we get a 11% rally that one day, right? So that's interesting. So we had, almost a bull market in one day. But the what's been interesting since then, and you folks that come here when I'm online most days during the week, is, I've been talking about our short-term database, and it was down in the sub-teens going back in April, and I've covered it actually went right to our Fibonacci projections, and that ends up to be, so far now, the low of the year. But we also saw the database start to climb back in, and those of you that are regulars know I always harping in about this 42% you have to get above. And I talked to you about the foundation that you have to have in the underlying market to have enough stocks, not just 7 stocks. It can't be the Mag 7 only, but you got to have all the foundation underneath the markets to be able to sustain a rally. And I've talked about that, and I've taught you that from my perspective. That's what is really important that we have to have. And what have we watched happen? We went from 42 into the metrics of 58, 62, and I haven't looked at the numbers, but we're around 76% on the short-term database and around 56% on the intermediate. So this will be the day tomorrow night. We'll run our data for the intermediates, and I suspect we're going to get a lot of traction. We're printing new highs in NASDAQ. We're seeing all these new highs, a lot of breadth in the market starting to come on board. So I fully expect to see the intermediate database get to probably close to 60%, 62% or better. And those of you that were around last year when we were in this extended rally, we were looking at the market staying, from the database viewpoint, staying above that level. I'll go into more details on this in a minute, but one of the things that is just kind of keeps slamming me in the face is the database. And I talked about this in the last couple of sessions, that we get this forward-looking type expectation that's built from the database just because of the average holdings of the positions when they come in. And we'll see what the run looks like for tonight, but regardless, it's in the 70 handle. It doesn't matter if it's grinding or doing anything right now. We're in a very robust stage of things, but now it's starting. I started digging in when I did the beautiful big bill, that special report I did the other day, and I put that dashboard together. I'm going to put something similar together like I did for the GDP calculator. I'm going to put some other metrics because something came to mind earlier today was looking at a couple things that are happening here. I got a few notes, but think about there are plenty of people trying to troll the beautiful big bill. There were some things in there those of us that are business owners need to pay attention to, and the big companies out there. I started something a little bit right before the broadcast. I was working on a quick project for everybody. I was building a new portfolio in WaveTech, and it's going to be an industrial boom portfolio. So let's talk about just you get expensing and depreciation. So I'm in the process of buying a nice new shiny Mac Studio monster processor for this studio because I've been having some issues with memory of recently because I'm running some pretty heavy loads in this my laboratory here. But we got that. We got the other thing that's out there, R&D deductions. And then we got business interest deductions. It goes on and on. Pass-through deductions. I mean, this stuff is, I could go through all of these details here. The opportunity zones, small business, QSBS, enhanced business increases 15 million per user, assets raised. I mean, folks, the floodgate is open. So based on, I won't call it maybe a full roast of crow, but, I'm being, as I'm seeing the database, this run tomorrow night, Friday's run, when you see me on Sunday night, I'm going to be addressing whatever this is. If we get above 62% on the database, then what's likely to happen here is we're going to get an extended move. And I was preaching last night, trying to hedge myself a bit, is, hey, the markets aren't the economy's not the markets. But all of a sudden, I was digging into it because of that special report I did the other day. I started looking at even deeper into the impact of this bill. Forget the money raised, forget all that. Just look at all the things they're doing. Just, everybody that's retired just got a, 20, 25% increase in earnings because they don't have to pay taxes on it. What's the overtime thing going to do? There's going to be a lot of workarounds on that overtime, even for small businesses and other things. It's going to get really, really interesting. One of the things I didn't see, I don't know, maybe if one of you knows and you can comment, is since there's no taxes on overtime, does the employer, if you're working on W-2, does the employer still get dinged for taxes on the overtime? I don't know that answer. I'm going to have to ask one of my financial analysts that I know really well, primarily on the tax side. But it just goes on and on. I'm just looking at, there's some other details here. But the point is that this is opening floodgates for small businesses, which is the lifeline and the heartbeat of America. So we're going to get some crazy things start to happen. So once again, Trump being a business guy, he's pumping the market. You can hate him. You can feel free to say whatever you want to say. It doesn't bother me. But the reality is markets are starting to see this. Trump's been big on crypto. That's pretty obvious. But the point is that we've got a lot of things to look forward to all of a sudden. I always tell you folks, you got to do the reverse fundamentals. If you have objectives to the upside on the markets, then see if you can find anything that could make that happen. And we're starting to see some things form that I don't think I've ever seen. And this is going to be the world going forward. Last night we talked about energy, primarily electric, nuclear, those type of things. There's a whole slew of things I want to write some special reports about So once again, if you don't get the Kendall report, get it. KendallReport.substack.com, $8 a month. I think there's a free 1-week trial, and then we on probably this weekend sometime, I'm going to turn off the $80 annual thing. I do that off and on during the year as a promotion. But the bottom line is what we're seeing here is pretty phenomenal, and it just keeps unfolding. I'm flashing back all of a sudden to the previous Trump administration, and they started, things just started to build on each other, and the economy got stronger and stronger. Now, you'll see here in just a few minutes when I go through some of the technicals and the quantitative side of things, there's still a bit of a stalling. The momentum is starting to stall here. It may be a consolidation. Like I keep telling you, I don't see any big downside. None of that is likely. So I'll go through those details in the quantitative section here in just a minute. One of the things that I think that we're also going to probably come up against in the near future is, looking more at what the taxes are going to do as well. We made the taxes permanent. All of these things are starting to come into focus, and the world feels wonderful if you look at just those things, right? There's a whole lot of things wrong, but there's that. And still there's always this thing that we could see the, Ukraine wars get over, and then we get less distractions on the markets. So things look pretty strong. The reports, I've already created the report, and just to give you a number, I'm looking at the other screen here. We're still on an upswing. We're still looking at the swing. Those trades that came out of the Substack last night were spot on, and it went way further. There was not a continuation trade last night like we get a lot of times, but the markets keep going. So let's set up tonight's stream a little bit more here from that standpoint. There's something that I did not write down that I wanted to make. Give me just a second to look at a couple notes here, because I made some notes just trying to make sure I covered some things here. So let's go ahead. What I am going to do, there's a function if you're a WaveTech user, if the database is updating and you try to build a portfolio at that moment, when you go to the next button to fill in, it's all red, it's all blocked out, because we turn it off. We can't have you building while we're updating data. So once the data is updated, then you can go at it. So I had that happen. I wanted to build this ahead of time. So I've got a portfolio queued up that I'm going to, matter of fact, I think I'm going to be really disappointed because all the symbols I put in there are not there, which is very, very disappointing. I'm looking at it right now. So what I might do here, if I can maybe get something, market's getting hit really good right now. We're down 25 handles just out of nowhere. We got a big decline coming. So, but yeah, so let's go ahead and unfortunately, it looks like that list. We may build that together. So give me a hands up or something. There's plenty of you around. Let me know if you want me to build this random portfolio so you can see how that works. And then it'll take less than a minute to update and run. Because I would like to see, I got a list of around 25 or 30 industrial stocks, because if there's going to be an industrial boom, we need to know where to place some money, see what things have already moved. I noticed some of the stocks that came in were good. So I'm just looking at some comments that you folks are coming up with here. Yeah, Asia opening bell has not stopped. Yeah, it's just really getting hit, isn't it? Let me know so I can focus on talking. Yeah, I mean that's part of the bill. They eliminated tax on Social Security. Yes, no tips, no taxes on tips, no taxes on overtime. So I was talking to my CPA about what some of the things that could happen from that standpoint. And no, it doesn't stop all tax, but it does limit some. You're right, Bo. Yeah. Tax credit is good, though, but does not apply to all. Thanks. I appreciate that. So somebody said, was it Caleb? $80. I paid double that for the Substack. Okay. I don't know how you did that. Did you buy it twice? Anyway, all right. So let's go ahead and let's go. Let me get the database up here, and then we'll just go ahead get in that. Then we'll try to build a portfolio here. Looks like everything is completed. So just let me check the database. Yeah, it's virtually unchanged here. Bear with me 1 second. All right, so let's go ahead and go there. So the database right now is 7690. We're getting that churning that I was talking about yesterday in the database here, where we're getting 100 and what we got here, 200 and we'll call it 3. Just trying to do this quick, around 340 on the entries and 280 on there. So a slight positive here. Yesterday, both of the models were neutral, so we didn't really pick up anything. But we're at 76%, right? So let's flash over and let's just talk about, since we're coming into Friday, we're looking here at 54% on the intermediate. So that would be a big jump to go from 54 to 62. That would be 8%. But the way the markets are trading up at these highs, it's pretty good. Yeah, they're still selling here on, I'm just looking, I've got my trading screen up above, and we're down 0.5% right now, 31.72 down on the session right now. Anyway, as we look at the sectors though, and this is the forward-looking part of this, is let's go ahead and go to the all stats page, and let's look at where we are on the big scheme of things from the standpoint of, sorry about that, wrong button. This is, we'll take a look at the weekly models over here. So right now, the weekly models are pushing as far as the average days long on the optimized is around 208. We're right now only current average is 38 days. So we have, from that standpoint, we're only less than 20% of the duration of that happening at this time. So we've got a long ways to go looking forward in this. So we'll see where we get, whether we hit 58. We should come into 58 to 52 on that from that standpoint. So, okay, so let's go ahead. Let me see if I can get that list that I had and see if it looks like it's doable for me to build this. Yeah, let's go ahead. And so talking, and I'll do a little chatter here while we're building this. So we're going to take a random set of stocks. I'm going to go back to the beginning of 24 when we build this. So let me show you how this works here. So we're going to go into create, modify. I'm going to call this we'll call it the ITS, industrial stocks. I'll fix this name later. We'll see how it comes out. So this is all you have to do. Once you put the name in, you click next. Then we've got a list of things that we have to go through. So beginning, we're going to start this on the January 1st of 24. So I changed this to, so bear with me. There's 10 steps here, but it goes quick. So we put in here 24. Have no idea how these stocks will look and how they've been trading, but let's find out. So we've got, we're just going to start with 100,000. Beauty, if you have less than that, you can use incremental shares. If you have to, we're going to leave this setting alone. I won't explain what I'm doing here. We're going to trade it aggressively. I want high activity, low liquidity. I want to use the cash the best I can, so I'm being aggressive with the cash. There's no transaction fees. And all right, here we go. These are the symbols. Boeing, Caterpillar, GE, UNP, Honeywell, Emerson, EMR, ETN, Eaton Corp, RTX, Lockheed, LMT, 3M, Deere, CSX, Norfolk, NSC, Illinois Tool, ITW, Parker, Hannafin, old company, Rockwell, ROK, SWK, Stanley Tools, Floor, FLR. We're just about there. J for Jacobs Solutions, PWR, Infrastructure Services, Cummins, CMI, IR, Ingersoll Rand, FAST, FAST, PNR, MAS for Masco, ALLE, GWW for Granger, and Hubble, HUBB, DOV for Dover. This is the last one, AME for Ameritech. Okay, so we've got a list of symbols in here. All we have to do is hit next, and this shows all green buttons, meaning we have data on everything there. So that's good to go. We'll just we'll go to next here. We're not going to do any management fees. All right, we're like 2 steps from done. So it's just calculated. When we get a position, we're going to put basically 6% in each position here. Based on this, we're going to go next, and we're going to, what did I name this? ITS. Okay, because I'm going to have to hunt it down here in a minute. Okay. So while it's doing that, I want to go over to the intermediate. So while that is running, I want you to see something else here. On the intermediate right now, we have right now 8 sectors long. So we went from no sectors just back in April. We got a lot of traction to right now 7,962 symbols in trend mode, having high probabilities that they will continue to appreciate. The data window I was showing you a minute ago, typical holding on these intermediates are about 220 days, which is the better part. About 1 year is the typical holding. It will exit if the trade fails, all that. But that just kind of gives you some metrics to understand. But when we look at we still have right now, we have basic materials, capital goods, consumer non-cyclical, energy, financial services, transportation, utilities are long. Utilities has been long now for, check it out, 339 trading days. And so it's not really gaining a lot in percentages, but the index continues. This is on a sector level. So we could break into utilities here if we wanted to and do a kind of a top-down view. And we could start to look at, the different, these are the subgroups, and we could look and break into these different subset and look at all the symbols that are long in here and who's participating. I won't go through the full breakdown, but there's full transparency in all of this stuff. So let's go back here. This portfolio should be run now. What I call it, ITS. I should have been smarter about that name. ITS stocks, here we go. So it's interesting. I wish I'd come up with this idea just a bit sooner, is what we're looking at here. This is literally from May. It's been a moonshot already. But from a long-term, so I only did a 2-year look back, had some pretty good runs on some of these stocks. So let's take a quick look at what this looks like. So last year did a 13% gain. It's up 460, but you can see that from May on, 3%, 5%. So these stocks are starting to get going here. Okay, so if we come up here and we can look at the individual positions, see what's long right now, and we can also see the return. So Boeing's up. Boeing is up right now 22, 10%. So there's only, out of this whole list, there's one stock that we bought that's underwater, and that was this Granger. So it's down 4%, but that's the only loser out of the bunch. So might be a little late to the party. Check out 3M, up right now, up 73%. So some of these stocks have already made a pretty good move. Here's another BE, Bloom Energy, up 90%. So yeah. So, but we could there's a whole lot of stuff that you can do here, and sorry, I've changed the buttons on this thing. There's a lot of stuff that we could do here to make analysis, to restructure his portfolio from some of these stocks that are long in the tooth. But I just want to see what, as a group, how well they're doing. So 15 of the, if I go back to the portfolio page here, if I go back one, that's 15, there's 26 symbols, so 15 to 26 are long, and the 90%, 91, 90.5% of the money is actually invested. So that's a pretty good return. Overall, that when you do a individual stock like strategy like this, you want to try to build which is, I'm looking at this. This came out of some things I was researching earlier today, and I thought, man, these are really good. I want to build a portfolio and to see. I will perfect this. I will let you folks know, and those of you that are WaveTech users, then I'll stick it in the Premiere. I'll code it out so you can find it in the Premiere. So you can go in under subscriptions here, and you can bring up and you can choose any of these stocks. So I'm an admin, so I can see thousands of portfolios that are being built. We actually run close to 10,000 portfolios every night in this strategy. So anyway, I just wanted to kind of use this as a way of, I'll come back on screen here, as a way just to talk a little bit about this potential onshoring, industrial boom. And this is what Trump is telling he's going to do. We got, they say we got $100 billion of tariff money coming in already. Also, we've got looking forward. I think the average tariff money is 14%. Last year it was 2%. So all of this money, and if that money is two things: pay down debt, recycle to put back in the economy. You know, Trump's probably right here when you look at the model. It was supposed to cause inflation, didn't. There's all of that going on, right? And I'll just insert this from the standpoint is, one of the biggest things now is we need to update and revise the Federal Reserve. There's no transparency. They don't tell us what their models are doing. So there's a whole lot of stuff. I'll probably try to focus on that on some of the Substack. I've been writing several special reports here lately, and there's I'm still doing some research on the Russell and some other things that I think are going to be important for us to go forward, because if that industrial boom come in, then maybe, Tom Lee 2 years ago when he said that Russell was going to go up, that it might finally go up. It's still lagging everything. It's still a laggard. Not that there hasn't been some good trades there. There have been. That's not my point. The point is that what we're looking at is trying to find a point in time, and this is old school stock analysis, is that typically when you get a big bull market and it's printing up like we're seeing right now, where we often get, where the rotation comes, so traders start looking for cheap stocks, so they go to the Russell or the mid cap, and they'll rotate money out of the large caps into the mid caps. That's classic Wall Street 100-year-old strategy, right? That has not been in play, and I'm still arguing until the yield curve changes a bit more, that's not going to be in play. But all this other stuff that I just read off to you, these tax credits and all these different things that are coming to market because of the bill that was just signed, that's going to be significant and impactful from that standpoint. So just a quick summary here. I'm still kind of talking about the database here. From the database viewpoint, what we're going to probably see as we come forward here is more traction on the intermediate. We'll probably get up to the up into 58, 62%. Once we hit 62%, it's a magic number that starts to put the probabilities of the continuation of advancement of the markets, even though we're at all-time highs, we're going to see a deeper rotation into the stock universe is what that tells us. And at 62%, like I said, right now we're at 54%, basically 8,000 symbols. There's a total of 14,620 symbols in this database. So we're going to take another probably big chunk and bite out of that, which builds that foundation. I'll summarize here, builds that foundation for the continuum of the rally from that standpoint. So, all right, so let's go ahead, and I've got NASDAQ up here. Let me go to ES here. And this was looking very different. We're almost down to the STX level. I'll tell you what I'm going to do here. I'm going to rerun a data sheet while I'm talking here. So I just go over and copy this window here, and let me rerun this, because I think maybe it's changed a little bit. All right, so I'm rerunning the data sheet. So let's go ahead and look at the technicals. So one of the things I've been talking about is that we're getting close to rolling over. I talked about that yesterday. All the algos are suggesting that we're going to see some declines, loss of momentum, probably coming into the 21-day simple moving average, which right now is, if we bring that up, That's 6170. It is rising, so probably around 6200 or 60, roughly 63. I'm sorry, 6293. This last night, this was the level that the models were telling you to buy last night. If you did that buy, I did that buy. I didn't show you, but I did the buy last night live, and that trade worked out. 63.12 was the exit on that trade, so that was about 18, 20 handles. I was able to extend it a little bit. There was some pretty good momentum when things started to roll earlier today, but the trade itself was set to exit at that level. So yeah, so while this thing's running, let me just see. No, I didn't say, listen, don't be an idiot, JMI. I didn't say it was going to 77K. I said if it broke, I think it was 94,000, then it would go there, but I thought it would hold. I never said that. Don't be a jerk, okay? Seriously. I mean, grow up. JMI. Yeah, so anyway, I love you guys, okay? But always love there's guys, I think, small children that run around the internet trying to make people look bad because they don't have anything to do with their own life. I will stop trolling you back right now. But yeah, so I never said that. Matter of fact, the number is, when we go to Bitcoin, I'll show you the number that was being projected, but I said the probabilities were like 0 that it would go there. So go back and listen to it. You'll see. Okay, so yeah, so this ES, we're looking at some definite loss of momentum. I think the 21 is going to be the key point. That's 6170 and rising. So between now and whenever, it's probably going to be 62 plus. So, you know, that's 90 handles. That's not, there's no expectation of big drop here for anything at the moment. There's definitely a need for a correction after what we've went through from the standpoint of the 11% day on Liberation Day to going forward. So that's definitely yeah, that's definitely what we're seeing here is the market's getting tired and stalling. Even though we keep inching out new highs, it's going on less and less momentum, which typically is a divergence type situation. So I'm still waiting for this sheet to run so I can talk about that. Yeah, so look at all the Substack newsletters, all of the, if you recall my goal on, or the targets on Bitcoin, 113 and then 121 plus, okay? Not 77. Okay, just a second. I'm waiting for it to run. It's really close to being done. Yeah, let's do this. I'm gonna, hopefully it doesn't break it. Shouldn't, but. So this is logic running for this right now, and we'll just go full screen. We'll get as soon as this is done, we'll get that done. But the I'll show you all the details and we'll review it. I'm kind of curious to see exactly what's going on there. But the of course they're real money. Oh, so are these, let's see, let me see what's going on here. Yeah. Yeah, so Bo's right. When I was showing this portfolio, those are all the models. They tell you the day before you're supposed to buy. So when you get a buy, it tells you tonight, to buy on the open the next day, and it fills the order next day. There's $15 billion of real money running in that. Plus, I don't know how to count the retail folks that are in there, but we know what our professionals have in there. Okay, so it finished. Okay, so here we go. It's still, it was, now it's a 75% probability for S probability. Hang on a second. All right. So let's take a look at this sheet. So I reran it. Failed breakout reversal. That's interesting because I wish I had a screenshotted that, but I do have the ability. Let's do that. Hang on. Since this is kind of more of a, let me go up here. I think, so this here, no, that's Bitcoin. Hang on. I'm just looking at a couple things on Bitcoin last night. Yeah, last night I was telling you buy the breakout on Bitcoin, but let me just bring this back and see if I can get to the previous sheet here, because this might be interesting to see. Okay, yeah, so this was the previous sheet before the break. Okay, let me zoom in on this so you can see it. Okay, I couldn't figure out why I couldn't see it on the monitor. So this was the sheet I ran right before we came live, okay? And it was saying futures showing advance again. It was basically telling us we're range bound. All of the PPMs are neutral. So let's see what, so that was at a little bit before 8 o'clock I ran this. So let's go down here now. And let's bring up the, okay, so I showed you yet a wrong sheet. So, yeah, so if we come over here, this is now failed breakout reversal. So it traded up against the numbers and failed. Now we have current market failed breakout reversal, showing dramatic reversal. Bearish reversal signals, failed 101 test reversal, support broken. So now we're going down here and looking at R262.87. So when these sheets, you folks that are out there to have the indicators, get these sheets, you'll be able to update and get new analysis on this, because this is a real-time sheet. So when I do a snapshot and I update like what I do before I start the show each day, then it gives you a deal. If you see a breakout, then you can see things go. But we're still under pressure, trading 89. This is about getting towards last night's lows that we got to. So it's pretty coming down fairly heavy here. Okay. So this is the most recent sheet now, and see what it's given us. Target, yeah, so 87, just break through here. It's looking at a 75 to 65 target 1, 2 on the downside here. And then it's got another deal here where we're looking at selling the rally. Don't know why I keep pushing that button. You sell the rally here, back up, a rally back to 98, then back to 78 on the downside. So it's identified a couple trades off of this break here. All right, so let's go on and take a look now at the. Excuse me one second. I'm going to grab this and throw it on another monitor. Okay. So, yeah, so pretty steep decline there. That's very interesting. All right, so let's do the NASDAQ. Where are we getting on time? 45, yeah. So we'll do NASDAQ, and then we'll probably jump right to, we'll touch on gold and go to Bitcoin and finish there. So you can see NASDAQ momentum starting to break down here, PPM starting to break down. One of the things I've talked to you about, and this is yesterday, and I was talking about the contracting volatility. Typically when let me blow this screen up. When you start to get this flatness and this contraction, it's signaling that we're likely to go down. So you can see there's still uptrends in here. The red dots are right now forecasting to come right down to the 21-day moving average, and then we'll probably get a bounce from there. All of the main flow here is still to the upside. So what that means is we'll test key supports. The trend is still your friend, and it's still signaling a higher buy from that standpoint. So that is all that's in play, but we're looking like we're going to flatten out, maybe come down and test some of these deeper support levels. Nothing drastic, or it doesn't appear to be. And excuse me, I actually did some buying on that dip. I couldn't avoid it. Yeah, that was actually a very nice trade. So, but so we started bouncing back already from whatever this thing is. I'm hoping that it comes back in a little bit, and I'll put it back on. But the NASDAQ has that same formation. The trend that's going on here is starting to fail. Let's take a look at the weekly. We didn't do this on the S&P, but weekly is also, the underlying is still rallying. So the red dots are forecasting over the next couple of weeks to come down into, once again, around 22.3, maybe 22.2, down in that range here. And that should be a good support. Like I said, nothing drastic, but this V that we have, typically what we'll get out of the V is a retracement back into the support levels, the moving averages, and then depending on what comes out of that, what is forecasted if we go down 6 weeks from now, that's what these dots are forecasting, are going to tell us that we're probably going to go sideways into those ranges, and then there'll be another, we'll have better forecasts once we get closer to that point, and if we get confirmation these things are happening. Now, in spite of, I'll just say this, when I was talking about the database, in spite of looking at the potential of getting more stocks involved in the database, it's not buying the index. So when it's buying these stocks, it's buying stocks that are in valleys that are starting to emerge into trends. So some people like to go, oh, it was buying the index on Friday. No, it's buying individual stocks. It monitors 14,600 plus individual stocks. So it's buying the individual stock that is coming off a base, most likely just starting to trend, not buying high way up here. It's when you see the database buying, that would probably be an interesting thing to do, is to review some of the buys. Maybe I'll do that on Sunday, so you can see what type of buys are coming into the system. People seem to think, oh, it lags. It's not lagging. It's buying individual stocks, and you're equating them to an index. It's not buying the index. It's buying that individual stock. And so that's why it's much different. Like it showed you, the portfolio I just showed you that we built is only 15 of the 26 stocks are long. So if it buys something, that means it has bottom starting to trend, some patterns that set up. It's showing future probabilities of that stock to move higher. It's not buying the S&P. Okay. And some people get confused very easily, I found. So let's do this. Let's go ahead to GC. I'm going to have to be quick here because I've been rambling on about a lot of stuff. So gold, this is weekly. It's got that caterpillar I was talking to you about. It just kind of going sideways. We're seeing some improvement, but if you notice, one of the things I said weeks ago, JMI, one of the things I said was that in this pattern, we should stay above the 10. We had one out of all of this last several weeks, we had 1 week where we closed under the 10. It rebounded right back, and we're continuing to flow out of there right now. So let me just bring that up so you can see that value. So that value is 33.33, and the last trade is 33.42. So we're just above that. We're going to continue to move higher in this pattern along this on gold, even though we got a breakdown of momentum. But the breakdown of momentum, when you see these indicators go down, it doesn't mean the market's going to collapse. What it means is that it's going to have some issues with the testing the moving average, which it did. When it broke the second derivative, it was right here on that bar. The next bar broke the 10. So when you get a break of the second derivative, what it tells you is we should challenge the value. So each one of these PPMs represent a moving average. So they're looking at something that's called the angle of attack. And when the angle of attack breaks below that second derivative, that tells you that the high probability that it will test and go through that value. So the next time we got kind of a V bottom, but there's the momentum in here. If you look here, it right now is at a plus 0.28. So anything under above 0.25 means the probabilities are about 60% will stay above the value of that moving average. Okay, and that's the theory that's behind all the PPMs is what's the angle of attack, what's the probability that it's going to stay above or penetrate or do something different. That's what these first, second derivatives. So you have the primary PPM value, then the first, second derivative. When those things are broken, it tells you some further expectations. And because each one of these are 10, 21, 40 SMA, and the bottom one, the 200, then that is actually going to be, that stair steps down to the moving averages. So you can see the white is 10, 21 is the red, and 40 is the green. So what it's telling us right now that there's probabilities for us to test the 10, but the angle of attack, if we look at what the 10 is right now, it's at let me make sure I get 0.71. Probabilities of getting below the 21 weekly on gold right now is not quite zilch, but it is only about 20% that you're going to go through that value. And all of the predictions going, if we look out for the forecast, nothing's dropping really below trend level. So this 21, ultimately, I refer to a sequence like this as a demand line. That's going to be your demand. You can buy all day long against this upsloping 21-day moving average. That's your buy the dip level if you're a trader. If you're holding, you know that you've got a really strong probability the market's not going to go below that level. Let's get into Bitcoin, so we got plenty to go on there. Oh boy, I'm getting blinking lights and now I'm getting a spinner again. Unbelievable. Is it? Okay, here we go. This is the issue that we had the other day. Let me see if I can kill some memory hogs here. If that's, I'm not sure why it's doing this. Very frustrating. Yeah, so Bitcoin won't come up. Very interesting. Well, let's just chat about it's been about 5 minutes, and this is getting to be quite frustrating. We had one show get completely disrupted by this. Okay. Just testing bandwidth here. Bear with me 1 second. I can't get that new Mac fast enough. Yeah, I think this is a computer situation here. Is the test is doing pretty good, so it's not internet. Yeah, I don't know what's going on, folks. Looks like the new computer can't get here fast enough, but all of you know one thing about a new computer. It just doesn't turn on and plug in. There's lots of installing and issues. That's a whole day taken away from your life, bringing in a new computer into your environment. Yeah, I apologize. Nothing's coming up here on Bitcoin. Very frustrating. Let me use the old faithful PC up here, above my head here. Let's just see if that's the case. So throw up some questions. I'll cover some questions here if you have anything. All right, let's just see if so it's definitely the Mac is having some issues because I'm fine over on the PC. So we'll just go ahead and I can do some analysis here, and I'll have to look up and talk about it. I won't be able to show it to you at the moment, so I'm fortunate. But yeah, so the break to 115. See, I don't have any of the pages. Let me just check one thing, see if I can. This is terrible. This makes me want to scream. Okay, yeah, yeah. So definitely, the Mac is not being friendly. I've closed down some tabs. It might be a memory issue. That will be soon history, sometime next week. Anyway, so, but from the standpoint, I would just tell you, I'll tell you what, sign up for a free version if you're on here. When I cover Bitcoin tonight, I'll make tonight's Substack a completely free version. So let's look at some of your questions, see if I can deal with that. That's Let's just see here. Yeah, it's funny. Jamie Dimon is has probably been the worst uh, analyst of everybody. He should stick to running the bank. Uh, yeah, so the tariffs, the 50% copper in Brazil. Um, what's going to happen out of this on the copper situation? We've got big copper mines here in Arizona, but Alaska and Minnesota, of all places, has a giant deposit. They're going to get those online. They're going to get these permits done and going, and the U.S. is going to start to bring that on. I'm sure Trump's using that as a weapon again. Um, so, Michael Anthony, I do need to address your question when I have full, where I can, I want to set that up because it's a really good question. And his question is, what sectors do you think are best sectors to buy? Um, so I'll have to cover that next week just because of the broken computer that I'm dealing here right now. Um, yeah, it used to be Jamie Dimon would warn it was, the markets react. Now it's like a buy signal. Let's see here. Yeah, some really good questions, folks. Thanks for those of you that showed up. This is, yeah, so somebody, Bonita Institution used VPM. Uh, since the uh, very first customer came in 1998, uh, I used to be really active in running that community. I kind of did a semi-retirement about 10, 12 years ago, but we still have a residual group of folks out there. So yeah, so I think the 8, 9 is typical of some of the longer term customers. Um, and the other thing is a lot of customers are old and sold their businesses and all kinds of stuff. Let me just see what else you guys got real quick. Yeah, Holly, I have to agree with you, right? I was telling somebody today that I have a favorite, I guess, self-trolling joke. I go, just remember, I'm smarter than I look. So let me just see here, a couple more questions here. Michael, I'm sorry, that's got to be painful. I've got a buddy that's about to early August go through that. I don't know, the same thing, but with back issue and vertebrae and stuff. All right, I'm just looking here. So, um, I'll tell you what, I'm trying one thing here real quick. If I can get Bitcoin to come up, I'll still cover it. Yeah, it's not coming up. I've got that spinning wheel again. Anyway, so thanks everybody for hanging out for an hour and 4 minutes. Appreciate it. Uh, like I said, I'll make the Substack tonight free, and so you can get some coverage and expectations on Bitcoin. Yeah, I've still got just a spinning wheel here, not getting anything. I closed the browser and tried to restart. That didn't work. Anyway, thanks again, folks. I will be talking to you on, on Sunday night on expectations after this little break here. Um, we're looking, it actually retested at lows and is trying to bounce right now. Typically, when we get declines like this overnight, they tend to recover fairly well. I can't look at any augos or anything at the moment. So we'll leave things like they are. Have a great evening. Thanks for showing. Sorry for these glitches. I sensed the other day that there's something going on. I've got a Mac Mini, and it's reasonably powerful, but it's getting to be better part of 2 years old and about to be replaced. Anyway, folks, thanks again for watching. We'll talk to you soon. Have a great weekend, everyone.